Averaging is buying additional amounts in a financial instrument or asset when it declines significantly from previous entry price. There is a common misbelief that averaging a losing position is a terrible mistake, be it investing or positional trading. Though this is not completely false, the success of averaging depends on the stock selection and the averaging strategy. For beginners who do not have good understanding about fundamentals, ETFs and indices are the most suitable instrument for averaging. Stocks do not move in a linear fashion like this. The long-term trend can be up, down or flat. Whatever be the case, there will be a lot of fluctuations within the broader trend. By averaging positions, we can take advantage of volatile price movements. Here, the points A and B are at same level, but fluctuations occur within that range. If our strategy is to average down at every 10% decline and exit each average trade at 10% profit, we would have ended up with good profit, though overall price hasn't moved in that period. This averaging backtest tool built for Excel shows the immense potential of this strategy. This Excel tool has 3 sheets. Get data. In this sheet, you can get the historical data of a symbol. You can load the historical data of required symbol by clicking on Load Data button. Or you can import your data by simple copy-paste. Output. Backtest results appear in this output section. You can see the trade date, entry price, exit price and holding period. In columns M and N, you can see the total capital deployed, profit loss and return percent. Input. You can average up to 12 levels with this tool. In column C, you can specify the position value of each level. In column D, you can specify the percentage drop at which new buy entry has to be taken. In column E, you can specify the target for each level. Though it's an averaging tool, the main advantage of the tool is that each average trade is treated as a new trade with specific targets. In this example, I have used Maruti stock. Maruti price has changed 11% between 1st November 2018 to 8th December 2021. But the averaging strategy has produced 31%. This doesn't mean that averaging will always outperform. Generally, averaging outperforms buy and hold in 3 scenarios: during steep downtrend, flat stagnant phase, and moderate uptrend. When there is a strong uptrending move, averaging will definitely lag in performance.